Hello from Altered Markets. Merry Christmas and Happy New Year. This is Ahura with the global economic outlook in the week ahead, which is going to be the last week of 2024. Also, we will look about a little bit the first week of 2025. However, let's first review about the previous week, what we had. Last week, we had three more important parts of data, or three more important type of data that we need to focus on that. The first one, it was the data from the Asian economic, especially from the China, mentioned that we had a slight progress in Asian economy, in Chinese economy, but still it can be mostly because of the holiday demands and holiday sales. So therefore, to be able to count on the Chinese economy, we need still more time. About the Japanese economy, while I should mention about the Japanese central bank meeting on last Thursday. Japanese inflation on Friday showed that the inflation increased rapidly from 2.3% to 2.7% in November, and while the BOG held the interest rate at 0.25 basis point or 0.25% with no rate hike, we can say that the BOG somehow made a mistake, made a mistake because the inflation is high, Japanese yen is so low. We know the Japanese import fell by 3.8% in previous month, which means that with the lower rates, which is ended with the very weak yen, made the prices very high for Japanese companies and Japanese users. That's why the imports very fell sharply. In addition, we had a central banks meetings. With central banks meetings across the world last week was one of the main part of the week to be focused and to be watched. Central bank, first of all, we start the main important or the main or the most important meeting. It was in United States where the U.S. Where the Fed increased the rates by 25 basis points. Right, the 25 basis point was which was something that the market also was expecting for that, but what was the important is that the central bank changed its outlook for the interest rates, for inflation, changed for unemployment rate. Generally, the data showed that the Fed members, FOMC members, right now they believe that U.S. economy can increase much faster, much better in 2025. The inflation can increase slightly bit more. They increased PC price index, core PC price index to 2.8%, while they expected that the unemployment rate also, they expect lower unemployment rate compared with their previous expectations. Generally, that made the central bank's members or policymakers to expect only two rates cut for 2025 compared with the full rate cut expectations in their September meeting. That was the main changes, which increased the US dollar demand and put the pressure on the stock markets. We will talk on the chart what happened and what we were expecting to be able to be seen. Later on Thursday, we had a central bank meeting in United Kingdom as well. The BOE held the rates at 4.75%. We talked about that about the tensions that the central bank right now, concerns actually we can say the central banks right now have over the government's over the new government's policies and the budget. That made the central bank to held the rates for now and wait to see what's going on. We know the inflation started increasing again in United Kingdom as well. The economic growth also is weaker. Generally, the BOE will have challenging days, challenging months in the first quarter, especially. In United States, we had so many other data, including GDP, the existing home sales, including U.S. leading index, and all of them they confirmed that the economy is still strong. And with the with the fourth quarter, the GDP expected, GDP expectation of 3.1%. They confirmed that the U.S. economy in the third quarter, with 3.1% economic growth, they confirmed that the U.S. economy is still strong and can grow further. On Friday, we had the central banks meetings in China and Russia. Chinese central bank held the rates at 3.1%, which was expected. We know that the PBOC, they are planning for much more stimulus and support for 2025. We have to wait and see what they're going to do. But generally, with these economic data that we have from China, more support and more stimulus, this is something which is very it's something that we expect so likely to be happening. And also, the central bank meeting in Russia, they surprised the market with holding the rates at 21%, while we were expecting, market was expecting to see the interest rate to increase to 23%. This 23% expectations was very high, which could affect the stock markets, which could affect generally the economy and economic growth. That's why probably the central bank take the step back to hold the rates at 21%. That made a little bit still, even if they would increase the rates to 23%, maybe the Russian ruble could fell further. But generally, holding the current rate also means that the economy is under pressure. That's still a gain, but even that held at the meeting, still a gain based on the decision, but based on the weaker economic data and the market expectation, market guess about that the reason of the holding the current rate, still the ruble got under pressure. For the week ahead, which is going to be the last week of 2024, we don't have too much data to be worried about. I mean, to be continued to watch, but the only thing is maybe we will have the, not maybe we'll have the we'll have the durable goods orders in United States and new home sales for November. These two numbers, they are something that we have to expect for new home sales. We are expecting to see a little bit increase, but for orders, we expect to see 0.4% fall, which mostly is because of the lower Boeing numbers of the sales. Then on the first week of 2025 also, it's almost the same. The most days of the week will be holiday. Only on Thursday and Friday we have the PMI numbers, which means that these PMI numbers can show that we are expecting to see a little bit increase in the December meeting, mostly because of the holiday demand and New Year demand. On the data front, we don't have it still in the economic calendar, but probably we may have the NFP numbers on Friday, which we are expecting to see a little bit better than expected if it published on Friday January 3. The economic calendar should be updated and see if they're going to publish on Friday January 3 or week after that. Most probably they're going to publish on January 3, which is going to be the first Friday of November, first Friday of January, and the first Friday of 2025 as well. On the charts, if we'll want to say that what market reaction can be to these data, the market reaction is the thing is that the markets still can ignore these numbers and mostly go after the Santa rally and the things and the changes that usually we have in the last week of any year. Most probably the US dollar index will slightly get a little bit under pressure, but still these numbers are very high. 107.55 is very high number, the level that the close on a Friday. The US dollar index will end the year most probably above 106, around these levels, above these levels, but which means somehow the correction, slightly correction from this level as well, but still 106 is very high level in a number and a very high mark for US dollar index, and we have to say that the USD index still is a positive and strong. These expected correction plus the demand of the last week of the year most probably will cause a little bit slightly uptrend in a gold, and we're expecting to see the gold to increase above 2,620 towards 2,700, somewhere around these areas, the 2,700, which we are expecting to see for the year. And about the stock market, on the oil market, let's go step by step. On the oil market, demand for the flights, demand for the colder winter and ongoing still geopolitical tensions will still hold the demand for the oil, which means that still we are positive about the oil market and energy market generally. We expect to see the WTI price around $70, $1 or $2 up, or $1 or $2 low. It's not a big deal, but around $70 is something that we are expecting to see for the WTI price for the year end. On the stock markets, SP 500 increased a little bit, had some correction after last Friday and Thursday fall, and especially and also this fall continued on the first hours of Friday as well. But generally, what we are expecting is a positive. We are expecting a positive last week for stock market, and we expect to see SP 500 to end the week about 6,000, which is still a very good number. Which is I have to check, but I think it's something around 13% increase from 2020, 13 or between 13 and 15% gain in 2024. Let me check this number. I'm not sure, but it's something around this. To be honest, I was expecting to end the year about around 5,300. I was not expecting 6,000. So that was the difference between the guess that I had and the number that we had. This is what happened generally in the market, and this is what we're expecting to see. If you had any other question, don't hesitate to write in the comment section. I will try to get back to you as soon as I can. One more time, Merry Christmas and Happy New Year. See you soon in 2025. Bye-bye.